changes. I know from perusing financial media and looking on the usual Twitter sources that there's a lot of anxiety there about a bear market or a market crash or a recession. So what I'd like to start out by saying is that the fact is that a lot of the churn we've seen in the markets that I discussed in the previous section is actually very, very healthy. And the fact that the laggard stocks are starting to catch up to the leading stocks it's almost like a spring that's coiling up for another expansion. And you can see that in the quantitative data. There's been patterns in the price, patterns in and volume that would indicate substantial returns, especially to US equities as we look out over the next 12 months. Now that also works with several other, what I would say, coincident indicators. Markets are typically positive during the Bitcoin halving cycle, and that doesn't end until next August. And the year after a US election is also typically positive, as pointed out by the Stock Traders Almanac. In addition, I would point out from a more fundamental basis that FundStrat and the chief strategist Tom Lee there does point out that the US economy, although it is slowing slowly. And so it's going to take some time, especially with the large fiscal spend in the US, which is helping to propel the government sector forward. It's going to take a long time for the US economy to slow down to a point in which recession is a real risk. So when we take a look at all the factors, whether they're fundamental, whether they're quantitative, or whether it's it just comes down to assessing sentiment, I think the medium-term outlook here looks pretty good as we look through the next 12 months. As we look further out into 2026, again, it's things get cloudy. That's 18 months away. What we can say is that if we just look at the U.S. presidential election cycle, which is again updated by Stock Traders Almanac, that would indicate that midterm election years are typically a week, but that's not a guarantee. We can point out plenty of exceptions, and that's something we're going to have to assess as we get closer to the mark. So for now, I think everything looks good. I think that we're allocated the way we want to be, and I think that we are experiencing normal seasonal volatility, just enhanced by the fact that it is a U.S. election year. And there is some new uncertainty put into the market with Joe Biden stepping out of the race and Kamala Harris stepping in.